We are approaching a really interesting point in the market. This type of environment is where some traders tend to second guess themselves. So they start to shift their positions or even throw in the towel as volatility really wears them down. In today's video of the Stock Market Brief Show, I'm going to share what I'm seeing right now taking place, how I'm navigating it, and we'll dive into my trading platform a little bit later to look at some of the stocks that are setting up in case these market conditions continue to improve. As always, I'm going to be covering some key things to watch out for. We're going to be looking at what's on deck, some intermarket charts. We're going to dive into some signal charts, expected moves, and one of the most important aspects is the market conditions. If you find this information to be valuable or helpful, please be sure to subscribe to the channel for more content on navigating these financial markets. Let's get into today's show. All right, people, welcome back to the show. I'm starting here with just a chart of the S&P 500, the SP, the big product out here. And then we're going to dive into kind of the snapshot of the market, kind of how it worked today, some of the news headlines, some of the things that JPM trading desk is saying, and even Goldman Sachs trading desk. And then we'll get into some other aspects of the market. But from a very basic level here, what is the current trend telling us in the S&P 500? We have a high, we have a lower high, and as of right now, we still have another lower high. We have a low, we have a lower low, and we have a lower low. So right now, the trend from a year-to-date perspective is down, okay? As it stands right now, we are seeing somewhat of a bounce. And the point of this episode here is because this is, when we're in terms of higher volatility, there's a point in volatility where traders tend to be like, they give up, right? Or they tend to throw in the towel, right? If they miss this move or this move from down here, they're like, okay, this could be the potential bottom. I'm just going to go ahead and I'm going to go all in right here, and I'm just going to let it do its thing because I give up, right? Or perhaps they started going long over here, and then they dealt with a lot of volatility to the downside, and as price actions finally coming back into this area to make break even, this wore them out, so they tend up throwing in the towel there. There's a bunch of different possibilities, and that's why it's so important to really navigate this market the best we can. So we look at things like expected moves, like market conditions, and so much more. So as it stands right now, yes, we are in a current downtrend. The 50-day moving average is declining as it stands. Price is below it, but more importantly, the 50-day is a more medium-term trend, and it is telling us that it is pointing down. The 200-day, that pink line, is rather neutral to flat, but it is starting to calculate down as it's aggregating new data on close. The 20-day moving average, which is a much more shorter term, is holding, and that's positive. So as it stands now, and if you watched the previous episodes, when we find a low, we start to look for follow-through days and various things around market conditions. And this was our actually first follow-through day. So the really big area here is down here at about 5,100 to 5,200. So if you are bullish the market, you really don't want to see this level breached and taken out as it stands. But as we started moving through this, if you're missed out on this move, is it right now the best time to enter? Not necessarily with the data that we have currently, but we'll only know that answer really in hindsight as more data comes out. Now, I want to point out the type of candle that we're looking at over here. This right here is known as a doji candle. A doji candle is basically where you have price open and close in the same area, and you have bulls and bears fight in both directions. And what this states here, simply put, is the market's undecided as it stands. And this makes sense right now on a Monday where we didn't have much macro data come out, but yet we have a lot of macro data on deck and big earnings. We'll talk about that momentarily. But as we moved up and we saw some pretty large range candles, the momentum is starting to slow as it stands. And the same thing actually occurred on this prior move up here where we had an indecision candle before it started reverting down. So if price were to come off, we'll look at expectations of the market momentarily, but that to me is a very normal type of digestion in the market. Even if we were to come back up into and around the 200-day or even last year's closing price, which would be a large move from where we currently stand, it doesn't necessarily mean that this is the bottom, right? We'll only know that this is actually the bottom in hindsight. And how far do you have to go? Well, first, I mean, I guess you'd want to see a series of higher highs and higher lows, which we're starting to see in the very short term. Okay, in the very short term, not the year-to-date term. But more importantly, we'll really only be like, okay, yeah, this is the bottom, but when we take a new all-time high out, because that's when we'll know, okay, yeah, that was the bottom in hindsight, but you still got to navigate because nobody wants to just finally go long up here and miss the entire rally back. Let's take a look at a snapshot of the market right now and just various news articles that had kind of been hitting the tape. We did get Texas manufacturing in, and it looks like kind of the outlook is worsening. Huawei came out developing a new chip seeking to match NVIDIA. Wall Street Journal reported this. Reuters reported this as well, which put some pressure on NVIDIA stock today. One of the first U.S. trade deals, Besson said this, can be taking place this week or next week. And we also had him talk about China as well. There's been a lot of tariff news. He said that it's up to China to de-escalate these trade tensions. As far as JPMs on their trading desk, they did comment that they are tactically bullish right now, but it's based on technicals, not fundamentals. And they said that the mega cap tech earnings could give the market a tailwind and ignite this rally, which could last for several weeks. Goldman Sachs had said that hedge funds net bought U.S. equities for a third straight week. But while information technology was the most net sold, driven by long sales outpacing these short covers. On other news, which I found to be pretty funny, and I didn't even believe it until I had to look it up, but the U.S. Senator reintroduces the Pelosi Act to ban Congress from stock trading, and it's actually called the Pelosi Act. I thought this was hilarious, but it says preventing elected leaders from owning securities and investments, the Pelosi Act. This is just crazy stuff. It's hilarious. If we take a look at the 11 sectors that make up the S&P 500, energy led the way, and that's not really a bullish thing when energy leads the way for the market. So the market did end up being flat on the trading session. The Nasdaq was slightly down, but overall, we saw some volatility intraday, but overall flat across the board. Towards the bottom of the list, you have consumer staples and technology. So you have a risk on type asset and then a risk off asset there too as well. Kind of all mixed in the kind of whatever you want to call it there. On deck, more importantly, why was today more of a choppy day? Well, it could be because, well, we still have the market waiting for a lot of information, right? Tuesday, tomorrow, we get JOLTS data. We get some S&P data, but the main one there is as a tier 1 type data report from a macro perspective is JOLTS job opening. Then on Wednesday, we get GDP growth rate. Then we get core PCE, personal income, personal spending. And then starting in May, when we get that new month, right, which you're going to start hearing people say sell in May and go away, right? That's the common thing that people will start talking about. I promise you that. ISM manufacturing, PMI, ISM manufacturing employment, and so forth. So initial jobless claims Thursday. And then Friday, we get more jobs data, non-farm payrolls, and unemployment. So we got a lot of macro data. And then to add more fuel to this fire, we get the big names starting to report. For example, right? We get after the close tomorrow, we get Visa, Starbucks, right? Not necessarily market movers, maybe Visa, because you think in terms of financials, some big financials might move with it. But the big dogs in the S&P 100, we got Microsoft, we got Meta, we got Amazon, we got Apple, right? So this is the large week of earnings that we have been waiting for. It is coming. Let's take a look at what's been taking place from an intermarket perspective. We'll start here with the US dollar. The US dollar was down on the trading session after a bounce from a pretty oversold condition here. The 10-year yield came off a bit too, down 1.17%, closing at 4.2%. TLT shot up a little bit over here as bonds move inverse to yields. If you take a look at the yield curve, we're at 51 basis points here for the 10-year 2-year. The 10-year 3-month is back to an inverted state at -9 basis points. If we take a look at the probabilities of rate cuts, what is the market pricing in for the Fed to do? They're looking at about 4 rate cuts going towards the end of the year. You can see we're right here going into the May meeting. Okay, we're at 425. 450, there's about a 91% probability that we're going to keep rates where they are. In June, there's a higher probability that we're going to start to cut rates then again, and then again into the end of the year. So we have 1, 2, 3, and then 4 potential rate cuts going into the remainder of this year. If you take a look at oil, which tends to be a good leading indicator of the bond market or even yields, and oil, right, we sold off very hard and aggressively, and well, we bounced from that level. Today, we were slightly down, and this, I mean, to me, looks kind of bearish, right? So is this going to break down and continue further? If so, for those that might look to short oil or look for products, there is one called SCO, which is Pro Shares Ultra Short Bloomberg Crude Oil. It's basically the inverse of it. As you can see, we saw a big move up. We're kind of flagging down, say, hey, perhaps if we do take off or oil comes off more, say if you're bullish bonds, right? Oil goes up, that could help bonds because yields kind of follow along with the oil market here. So that could be a potential play. Or if you're bearish oil, maybe you're bullish bonds, right? So there's a couple of ways to look at that. I'm not much of a short seller myself, but I know some people are, and I figured I'd just kind of point this out here. I did find it interesting today. I don't have the chart, but oil was down on the day, but yet energy was the top performing sector. And those typically have a positive correlation with one another. Go figure. And so I thought maybe here too, energy could be a close one to watch for potential fade if oil actually does come off here. Take a look at gold. Gold is consolidating up near and around these highs. We had a big reversal at that 3,500, and right now we're pulled back, but still holding rather strong. Now, the thing here is to watch the dollar, right? So the dollar came off today, gold went up, and this was still a pretty big move to the downside. So if the dollar is going to doodle around and potentially still move higher, that could put some pressure or more time to consolidate on something like gold. I wanted to look at the copper to gold ratio one more time. This is the weekly time frame, and we're dating back to like the mid 70s. And you'll see these gray shaded areas on my screen. Those are marking out times that we've had recessions. And in short, what does this line on my screen mean? What is this ratio line? When it goes down, it means gold is outperforming copper. When it goes up, it means copper is outperforming gold. Now, copper is an industrial economic metal, right? Copper can be gauged as, hey, when the price of copper is going up or outperforming the price of gold, things are going good in the economy, right? Or potentially inflation, right? There's a lot of different ways you could look at it. But gold, when gold goes up at a massive rate, people start to like say, hey, what is actually taking place here? Why are people running to what's historically known as more of a safe haven asset? So when you look at this ratio and you look at these times that we've had recessions, what do you notice the line doing leading into it or through it? You see it typically going down. You see it typically going down. You see it going down, down, down. Are you down, 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 down? You get my drift over here. And where are we right now? Well, we're down. Okay. So the point of this, bringing this up is, I don't think we're really out of the woods, right? I don't think that necessarily a recession is right here, right now, which it could be, but I don't think we're necessarily out of the woods for some future economic pain. And I think that this chart helps depict that. Now, can we dodge it? Can we have a soft landing or no landing or whatever, as people think that there's going to be more of a hard landing now? We showed that data on a prior video. Absolutely could be the case. But I just wanted to call that out because I think it's an interesting chart, right? It's just interesting data. If we take a look at the Bitcoin to gold ratio over here, this is measuring map of the 4-week rate of change. And this is known as the Sailor Shift tool, something that I built years ago. And it's been a very, very powerful tool to signal when to get into crypto, when to get out of crypto. And it's basically measuring and mapping the 4 weeks of a high beta asset versus a low beta asset. And right now, this last week, we did cross over to a buy signal. Okay, we even try to talk about front running the possibility. There's some people that like to front run it. So we got the buy signal. There's not an official trigger yet, but the trigger would be is if we break last week's high. Now, price action went far and fast, so you still got to manage risk as you see fit. You don't want to be caught up in whipsaws and whatever the case is, but there is a technical signal. Now, there's marks on my screen that says no trigger because we got the signal, but there was no trigger. Now, the trigger is a strategy that I use, but yet a lot of people build their own strategy. So I will update you as this progresses, and I'm just going to keep on continuing to mark the lines on my screen for the times that we had buy triggers to sell triggers and so forth across the screen. If you look at Bitcoin as a whole right now, we contracted over here. We broke this downtrend line. The 200-day was still sloping up. We saw a nice little pop through. The relative strength line between Bitcoin and the S&P 500 is sloping up here too as well, the 50-day moving average. And we pretty much came into a new high territory actually on this relative strength ratio too, which is a pretty bullish sign for the crypto market. So, hey, perhaps we do consolidate a little bit, but take out this high, and then we get our official trigger there. Take a look at the signal charts in the market, right? These I like to use for more shorter term looks into the market. And if you remember this chart, this was when the market on April 7th was like really just down big. And we were looking at this technology sector bullish percent index because we were mapping out back to the 2000s. Like, we haven't seen a reading this low for a very long time. And even so, not even was it a long time, a few years, but you don't see it happen frequently, right? 1, 2, 3, 4, 5, 6 times it happened throughout history of this specific chart dating back to the early 2000s. And that right there was enough for me to know, hey, there's a high probability that the market's going to be bouncing in and around these areas. And if you take a look here, we got this very extended reading on the bullish percent chart. You can see technology sector bounced up, came in and bounced up higher from about 180 to about 208. So yeah, that was a pretty big bounce. But now what are we doing? Now we're starting to resolve to the upside. So if I zoom in on this, you can see that we're about 85% right now, which means we'll just say 86% because it's 85.92. 86% of the charts in the technology sector are on buy signals based off of the point and figure charts. If you look at the RSI, it's starting to move into an overbought condition. I pointed out many times where we've seen bearish divergences, and it actually led to the market coming off a bit. So I wanted to call this out now. I don't know if we're going to get another bearish divergence or not, but that would be definitely one thing to watch out for. And that could very well lead to me bringing this back up again and saying, hey, watch out here, because the market is in a place where it's more likely to pull back. But if you were prepared ahead of time here, well, you may manage to get out of short positions or potentially play a bounce. And now I'm saying the flip side of this, hey, just be aware that now we're getting a little bit more into the overbought category. If you look at the bullish percent index for the NYSE, same thing. We saw a pretty big divergence forming over here. We led to a nice big bounce, and the RSI is moving into more of an overbought condition, but it's not there yet. And then the bullish percent chart is not really that frothy either there. So moving on to the bullish percent index for the NASDAQ 100, we were oversold, right? Also, bullish divergence that took place over here led to a bounce. Now we're moving into an area that we haven't seen for some time as the NASDAQ 100 is getting a big relief bounce. And we're not yet overbought here on the RSI itself, but we're not too far off of that either. And then you look at the bullish percent index for the S&P 500. We just reached into that overbought condition. I want to remind everyone that overbought can remain overbought for a long time. Oversold can remain oversold for a long time. But we are moving back into that area. As we pointed out prior, this was a very oversold condition with an oversold RSI, and that led to a nice bounce in these markets. I thought this was a pretty cool chart here too that I wanted to share. This is looking at the RIDEX asset ratio. And for those that don't know, that maybe want to look at different ways to track sentiment, the RIDEX asset ratio is a great way to do that because it's actually looking at real funds. So if you want to Google the RIDEX asset ratio so you can kind of get a better grasp around it. But I like to look at the RIDEX asset ratio. I like to look at the NA, the individual investment surveys, and then also the National Association of Asset Managers surveys there too as well. But this one I wanted to point out because if you notice that the 2020 pandemic was here, the Christmas Eve massacre was over here, the 2022 bear market was right over here. And what do you notice this doing? Well, we got rather more focused on a bearish perspective here, and it reached up into a reading of about 0.36 on this ratio. And you can see as we were down here, this was very frothy levels, like pretty bullish. And what happened here? Well, we started to go into the bear market. Over here, well, we kept on going higher, but eventually it resolved itself lower, and this ratio started to pick back up. So the reason why I'm calling this out now is we're up here at about 0.20. The market sold off solid 20%. It was a big move, and now we're moving up. So is this the most steam we have, or are we going to potentially see it up here and get another leg lower at some point, maybe come to retest down into these ranges? Hey, that's a possibility. And if it does happen, I'm going to bring this back up and I'm going to revisit it if we come into this higher ratio where we've seen the market kind of settle in at prior. So I think it's a useful tool if we were to approach those levels. As far as a signal or anything right at this current moment, it's not. But I wanted to put that in front of everyone's faces and eyes as it stands right now. Let's take a look at the expected moves of the market. Every week I track the expected moves. For those that are new here, expected moves are another way of just saying what is the market pricing in for risk in the next week ahead. That's all those orange lines. All those orange lines you see, I get those on Friday of closing business of the prior week. And you can see here, the market's been fairly good at handicapping its risk this this year so far to an extent, right? It's been very, very volatile, but it's been doing its work. We've tagged, there's been every week we've tagged the expected move. And that's an important piece of data there. It's every week except for 2 weeks. And there's been what, 15 to 16 trading weeks now in the year. There's been a few times the blue markings is the times that we've actually exceeded it. Okay. And the reason why I'm pointing this out is because the expected move this week is still rather large. It's at $14. That's plus or minus. The prior week was 16, and the prior week before that was 25. The prior week before that was one of the largest ones I've ever seen, which was like 34 or $35 of expectations. So if we know that almost 90% of the time these get tagged, I think it's likely to say that, hey, we can very well come to the lower expected move here, potentially even back to the month to date around 532 to 535-ish, and or even come back up to the upper expected move up here, which would be all within what the market expects. So as it stands right now, we're basically unchanged on the week, but I would imagine, based off of this historical data, that we can very well come slamming into one of these levels in the very near future. We'll get those exact levels here on the 15-minute time frame for the S&P 500. So here's the SPY, and if you were trading intraday, one thing that I wanted to really call out here that was pretty much clear as day for me of way to trade was the prior trading day. I think it was a Friday or Thursday, I can't remember, but we had this pullback, and then that one day we just kept on leveling up. We leveled up, and then we had the following day. So this was, I believe, Thursday, and then we went higher and higher. It was almost algorithmic in the way that we kind of moved higher. And the reason why I'm pointing that out is because we actually never touched that VWAP from this swing low. And I was tracking it because I was like, I know we're going to probably tag it at some point. And today was the day that we came into that. As we were pulling down, we tagged into that lower VWAP. And typically the first test of a VWAP like this is where you get the initialist biggest response. And we saw a pretty nice rally from that level. Now, we are above that rising 5-day moving average, which is positive. So I would say if we start breaching under this low, it'd be more cautious in that environment. So as it stands going into tomorrow's trading session, we have some confluence down there. This is the lower daily implied move, which is above roughly at about 545 down to around 542. I'm rounding these numbers. If you want the exact, you can screenshot this, put them on your charts. To above us, the daily vol range is about 557 to about 560. That would be the upside move. So if it comes up into these ranges and holds, awesome. We'll start paying attention for more movement up to the upper weekly implied move. But if it were to come down here and break this low and breach it, just be aware that if it were to slam down lower, right, this opens the door to the lower weekly implied move, which is still well within the market's expectation. If you want to look at the Q's expected move for tomorrow and the weekly implied moves, you can screenshot this and put them on your chart. I'm not going to do a full analysis here on that specific chart. And in the IWM too, if you want to screenshot this, you have your weekly implied move, the upper, lower, and your dailies for tomorrow there too as well. One thing that I did not note that I still want to note is that this red line is the SPY all-time high VWAP, and we're currently above it. So that's a positive sign. What in short does this tell you? It tells you that the average buyer from the all-time high is now green on since that point is now positive in the money from all that volatility from the all-time high to where we are now. They're flat to slightly up, the average based off of that volume. We'll look at the SPX here momentarily and show you what that looks like. Oops. Let's go ahead now and look at the market conditions. Now, market conditions, for those that don't know, the market conditions this is the most critical thing. If you actually want to be a good trader, right? And if you watch other people talk about like stocks and all this stuff, awesome. Don't watch different shows, whatever the case is. But if they don't add an element to like market conditions layered in with whatever their strategy is, that's a big miss there. Because the thing is, when market conditions change from maybe we'll just call it plus or minus or bullish and bearish, how do you determine those two things? And then your strategy, like I'm primarily a swing trader, I'll just call it ST, swing trader. I know that swing trading does not work good in this environment, but it works very good in this environment. But the problem here is when people typically have a strategy that works really well, but they have no idea about the market conditions it's working well within. When market conditions change, they still try to figure out that, like, no, my strategy, like, it's not working, but it worked all the way over here, and they can't try to double down. And then this is the problem, is they tend to their system fails without actually failing. It's just the market conditions have changed and they did not adapt. Now, when we come into another category, whether it's bullish or bearish conditions, what strategy works in this environment more so than the swing trading? And that is a big takeaway here. Now, I want to talk about, how do I determine market conditions? I determine by two things. One, the very first, most important one is the gamma flip line. The gamma flip line, most importantly for the SPX, the big product, right? The biggest product here is the SPX. When we're below the gamma flip line, there's something that it's very important that happens. And it's not me just saying this. This is true. This is what happens. But volatility tends to increase when you're under the gamma flip line, because dealers, they're selling into selling, they're buying into buying. This is what creates volatility, and it decreased liquidity. Now, when that's the case, do you think that swing trading or breakout trading is a better strategy? No, because you get a breakout and then you get a whipsaw and then it goes around, right? You'll have your successes doing it, but it's going to be a much more difficult environment, and you're not going to see the returns that you did, say, last year, when the market basically, you can throw a dart at a board and hit a home run, okay? That's not the case here. When you're under the flip line, typically I turn to more of a day trader. When volatility increases, I become more of a day trader, or much more shorter term trader, from maybe 1 day to 5 days, okay? And that's simply because, and then also I'm not really doing breakouts, I'm trading big fades, right? If the market sells off really hard into an expected move, I might add in a little bit of add a little bit of a position and fade that move. So it's a different strategy for a different environment. How do you pick your environments and what strategy works best? It's so critical to becoming a much more consistent trader. So first and foremost, that's the gamma flip line. But I want to talk about here, this little VWAP right up here is the all-time high VWAP, the SPX. That's in confluence with the gamma flip line. We're actually still below it here. So just be aware that it's acted as resistance. It acted as resistance. We saw a strong move. Maybe we get a little overshot. If that's the case, perhaps maybe it does a little bit of jiggle wiggle and potentially heads lower and tries to consolidate this current move. Or maybe we come up and then we consolidate up here and it turns back around, right? There's a couple of different ways we can look at that, but it's not the data that we don't have now. That's number one. Okay, so that's part one of the market conditions. The second is something like a moving average, right? I like to do this. This is what Brian Shannon does. He looks for the direction of the 5-day moving average, and it's something that I found to be pretty useful for gauging things. Now, I don't use it as a buy or sell signal. I just look at the direction of this shorter term average to let me know, saying, hey, things could be firming up here, so this could be a time to start getting a little bit exposure back in. And as it stands right now, I'm looking at SPY, Q, IWM, DIA, XBI, semiconductors. These are green, which means price is above it, and the 5-day moving average is currently calculating higher. So that's a good sign. However, we're below the gamma flip line. So what does this mean? It means that I am going to beginning, and I'm going to bring you into my computer here, which you're kind of already in. I'm going to be showing you some stocks that are setting up, because now I'm starting to look for names that have the potential that if market conditions get better, maybe perhaps some of these names start to break out and the market starts to fix itself, okay? But it's all about position sizing, managing risk, and looking for names that have been decent performers. So I hope that gives more insight into that. I like to look a little bit deeper than that too. I like to look at various net gamma exposure levels on my screen here too. So the put wall right now is at 5,200. That's potential support. 5,600 potential resistance. And I got a level down here at about 5,400. That looks to be somewhat of more of a local support level. If you take a look at the curve of the VIX futures, this is still showing us backwardation. For those that don't know, backwardation versus contango, when it comes to terms of the VIX futures curve, it says, hey, VIX is higher here on this contract. We got problems right here, right now. And in the future, we have less. So yeah, we got problems right here and now. I would expect that if we can get above the gamma flip line and volatility settles, this is going to move more into a flat curve to potentially back into contango, which is ultimately a better market condition for a swing trader, not necessarily a day trader, okay? If we continue on and we look at back month versus front month volatility, we've been talking about how when you're below 1.0 over here, you can typically see bounces in the markets, bases being formed, and so forth. Well, we kind of came back and up through that, and you can see that, well, we saw some massive volatility, but we overall did bounce around and try to find ourselves a higher move. If I continue on, vol control positioning, since we're talking about volatility, they are still sellers of equity over here. As you can tell, they've been basically puking themselves out over here, heading down. But however, if the curve starts to flatten out to go into contango, if we get back above the gamma flip line, this could stabilize this massive puke. The CTAs, same thing right here. These are commodity trading advisors. They look for key levels maybe in the market, right? I'm thinking about 5,600, but we'll see what other models might suggest there. They become buyers, right? No question asked. They're buying and they're trading momentum. And this could be a big tailwind here for the market. So if the market gets good earnings on these mega cap names and it brings the market up higher, like what JPM said, they're tactically bullish, hey, perhaps that might trigger some of these CTAs to start becoming buyers too, really kind of bringing us into more of a stronger momentum move. But that's not going to come with any downside price action, right? You typically get fake out moves, right? If we get a big down day this week, down to the lower expected move per se, come down into here or even down into here, and it's very fast and aggressive, or even down to fill the gap, right? People are going to freak out like, see, we're going to go to new lows. And then all of a sudden, boom, earnings take us right back up or something crazy like that. So you got to be vigilant, right? You got to be aware of the shorter term signals and you got to be aware of your market conditions. Okay, so that's what we have on the brief. Now, because market conditions are getting a little bit better here, right? They've been firming up. I'm starting to look at more names. So I'm going to share a couple of names. I'm not ready to really place trades at this current moment. Right now, I'm pretty heavily cash handed and I don't like being heavily cash handed, but I got part of this bounce. It felt really good. So I'm selling into it. And now I'm looking for more opportunities in this market as things are firming up. So let's go ahead now and head over to my Thinkorswim platform where my watch list is currently hiding out. Okay, so this is my Thinkorswim platform. If you want to screenshot it, there's some of the names from my tight list this week. Now, for those that don't know what my tight list is, this is one of the many benefits. And this by far not an all-inclusive list. I just grabbed some out that looks okay. This is something that I make every week for my Patreon community. It's $9 a month. Okay, this is just a part of it. There's many benefits inside of that Patreon group, which if you click the pinned comment link, you can look at the Patreon page. You got to sync your Discord up to Patreon when you sign it up for like $9 a month or whatever, or do the yearly and you save a little bit more. You get all those benefits. And this is one of them. I do my watch list every week with my tight list. And I'm going to walk you through some of these names that are setting up. Now, keep in mind that you have earnings on a lot of these around the corner. And I'm not necessarily want to trade holding through earnings. So I'm just showing you the chart now, what it is that I'm looking for. So keep that in mind. This isn't like a recommendation by any means or anything like that. It's just me showing, hey, some charts are firming up here. And once we get through earnings, maybe it can give us some more insight. So for example, this one does report earnings not too far from here. And this, I don't even know what this company is. I'd have to look it up. But PGNY, I legitimately just found it on my tight list because it was looking pretty good. But what do I like about this? Well, we've been having market volatility and this has been kind of going sideways, right? We're getting kind of some confluence here. The 200-day still declining. I don't like that. Year-to-date VWAP, we're above it. 50 is sloping up, 20 sloping up, and price action is getting very tight. Volume itself is also drying up here too, which tells me that, hey, we're probably due for a kind of burst of volatility here in the near future. And overall, the chart pattern, it's actually from a year-to-date perspective, it's up on the year too, which tells me also like, wow, that's outperforming the market quite a bit, right? Relative strength. And another thing here is you got this low, you got this higher low, and you got this higher low over here. Price action starting to contract and get very, very tight. So perhaps a breakout, maybe at around this 23 marker, which we ran into prior supply, can lead to an expansion of volatility to the upside. Now, I want to preface this once again. You do have earnings around the corner. I don't know what earnings is going to bring. So just be aware of that. That's more of a binary type of event. BRBR, this is a bell ring brand. So this is a bigger one. And you can see here from a year-to-date perspective, we're above the year-to-date VWAP and we're flat basically year-to-date. So it's also outperforming the market. We're above a rising 200-day, 20-day, and the 50-day is kind of sloping down here, but it's rather flat to neutral. So what would I look for like something like this as it's tightening up? Well, as we're kind of doodling in and around this area, perhaps if we start breaking through this 76, 78, this is a larger base that's forming to maybe go retest this 80 and pop through that and continue this current trend that we see, because as you see on the weekly time frame, we've been seeing a lot of higher highs, higher lows. We've seen some volatility and some shakeouts, but overall it's doing good as it stands. And that right there is enough for me to have it on my radar and potentially look for consolidations like this and play for breakout trades, and hopefully that it correlates back with that market. We'll look at LNTH. This one's a very choppy one, kind of all over the place, but I'm bringing this to the attention because it is contracting right over here. It's positive from a year-to-date perspective. The 50-day is inclining. It's below the 200-day, but the 200 is inclining too. The 20-day is sloping up or above year-to-date VWAP. You have earnings around the corner, but another one where price action is kind of contracting here, and there's probably a highly likelihood that in the very near future, we're going to see an expansion of volatility. Perhaps that breaks us out to retest these highs and maybe even further, but you do got earnings to be well aware of. ABT, this is Abbott Labs, another bigger name. You can see that we did have earnings here, so we got that out of the way. Good. Market went up higher. Now it's consolidating as it stands. We're below the 50, right at the 20, and the year-to-date is kind of sloping sideways. So this one right here, if I were to look at this, right, are we seeing relative strength versus the market? Yeah, right. Is it doing good year to date? Yeah, absolutely. It's doing good year to date. It's up 15% year to date. It's been seeing some chop over here, but overall, what do we see? Well, we see kind of this downtrend, kind of a shorter term, lower high, lower low. But recently we saw this, we're seeing a higher low, and we saw this little higher high here and this kind of flag formation. So right now, right, as price is pulling in, volume is contracting here too, holding the year to date. So if I were to go long, where would my stop be? It'd be over here with the hopes that, hey, this breaks out, takes this high out, and continues up. You can maybe build into a position or so forth. But right now, that's holding up. And if it breaks down, well, I know where to get out. And if it breaks down, stops me out, and turns back around, well, I can always look to reset it back up, right? It's just managing risk and managing a position. It's a piece of inventory. I don't get married to it. AEP, this is, I believe, yeah, a utility name. Pretty similar type look. These are near highs, right, for the year. It's positive. Rising 50, rising 200-day, kind of flagging out over here. You got earnings in a little bit. But another one that's been holding up relatively well. LTH, which is Lifetime Group Holdings. Another one that's also been kind of seeing a little bit of volatility, but is this just a larger base that's forming as we're heading into earnings? So this is another one, right? A good-looking chart, good year-to-date performance, good relative strength. Another one I'd say, hey, if we can hold and we can break through 32, maybe this is just a larger base to take the next leg up. And that would be a very positive sign. Take a look at RBA over here as well. Is it positive year to date? Yep, it's showing relative strength. Price action's getting rather tight here. So another one that, hey, maybe perhaps, right? If we can start breaking this trend, get through 100, we can have some stops down here or stops over here, and this starts to firm up and continue this leg higher. This is Richie Bros. FAST, this is a popular one here, Fastnall. I don't know if I'm pronouncing that correctly. We do have a split coming here around the corner. Earnings did report, and it was the market liked what it saw. And that's a good sign, right? Because now we look for the consolidations and it's holding up right here above a 20-day, above a 50-day, above year to date, above a 200. So now if it can firm up a little bit more, perhaps this is another one that takes that 82 out and we could potentially go for those highs over here and potentially higher. Where would you stop out at? Well, I mean, I personally would probably want to see it firm up a little bit. And if it breaks out and that's the low right here, then I probably have my stop down there and kind of trail it through. WEC, this is an energy group one, another utility name holding near highs. Another pretty positive sign here for the market. Just be aware, earnings on most of these names are around the corner. Cintas, this one took some pretty big hit on earnings over here and has since recovered, and price action is getting tight. So a little sloppy, a little all over the place, but when price action gets tight, perhaps that opens the door for a continued move here too. And this was just more of a larger term initial shock of volatility before another leg higher here perhaps. TJX, this is actually kind of an interesting name to me because it's in the retail space, right? And we're talking about earlier like a potential recession, but I think, and then you have all the tariffs and stuff too. And this TJX is more, I don't know, I don't know if they're buying directly from overseas or if they're just buying from clothes that don't sell in various retailers. So I don't know. I'd have to look into that. Because if that's the case, perhaps, names like this can be very good during all of this tariff news. And So far, it is actually holding up from a year-to-date basis, and it is consolidating. It's near highs. So a new high is not bearish necessarily, right? Volume went up, right? Boom, volume went up, and now volume has been contracting as it stands right now. So this is another name that might be on the radar for a potential continuation to the upside. NG, this is some nat gas equity, I believe here. And this one's coming into earnings, but I did notice that price action was contracting over here too. We did see some big volatility, but since then it's recovered. So that's holding up. EVRG, another utility name. They look very similar. I'm speeding it up now. KTOS, defense name, also seeing a series of higher lows. Price action now is getting a little tight. We are moving into that earnings, but also, is this a bigger base in bullish context? I would consider that one, yes, as it stands right now. MCK, so a big healthcare name, also kind of going sideways, but firming up over here at highs of the year, and it's trending higher. So these names have been performing good. So when they consolidate, they could be names to watch out for. HRB, which is H&R Block. I know we're through the tax season here now. We're going through everything. The price action did pull back, and it came into a rising 20-day. The 50 days increasing. The 20 to 200 day is there too. We have earnings around the corner. I mean, this kind of like move, quick consolidation, follow through, kind of a flag pattern here. So perhaps this actually opens the door to go retest 64. And if it's a full measured move, that can take us up maybe 68 to 70 with some good follow through there. And I zoomed out over here. You can see that it also broke this kind of downtrend, and now we're getting our first kind of official pullback here. So also another good looking chart as it stands. So hopefully that gives some more insight into some of the names that, or what I look for in various names when I get back into the swing trading mode. As it stands now, I've been very active in day trading, and it's been doing very good right now. So I'm very proud that I've been able to maintain my swing trading portfolio, maintain my portfolio, but also, focus in on some of the day trades and kind of scalp here and there too as well. Hope today's video gives you some good insight. That's all I got. I'll see you later.